Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, April 12th, 2023. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right now the ES popping higher on CPI data prior to the RTH open. CPI coming in a bit better than expected and seeing a little bit of a pop to the upside. Now, this is going to be important here, especially for the ES, as price has taken out the previous week's high and already starting to show signs of backing off here. If we start to fall back below the previous session's high, we could easily turn into an outside day down within the trading range as this market continues to stay mostly range bound. Overall, the uptrend remains intact, but again, after the recent rally here, we've seen a trading range action. And if we're going to fade at this edge and then rally to this edge and fade, you likely come back within the range and continue to build out. We could even take out the low and pull back into the range and start developing more of an expanding range at these highs. So this is going to be an important zone to watch here. Can the market hang on to these gains, or do we start to fall back below the previous session's highs, which would open up a potential outside day down within the developing trading range? Here's a look at the NQ. You'll see the NQ right here has developed a very narrow range as well over the last 8 days or so. The recent attempt here through 4-day highs is starting to see an initial rejection, or at least a pullback away from those highs, and now price already back below the previous session's high and those 4-day highs, which again could open up a return back to the lows of the session or back to the bottom of the trading range as this thing continues to play back and forth. Overall, the uptrend remains intact here as well, but we really need some significant either breakdown attempt or failed new low that could trigger the next wave of strength, or price needs to be able to push through the previous 4-day highs and really start to open up a stop run day type of move. So as of right now, we're still range bound, still an upward bias, but a failure to hold above the previous session's highs could open up the previous session's midpoint, followed by an outside day down. If we take a look here at crude oil, right now crude oil up about 2/3%. This one here been trading around the 80.5 previous year's close, very narrow 6-day range here. This morning we're seeing some strength here to the upside, price pushing through those highs here, and these are the highest prices we've seen in a while. Price getting as high as 82.48. 82.66 is the previous quarter's high. That's an important level as well. So if we change this from yearly to quarterly, we'll get the quarterly levels here, and very close to it right there. The previous quarter's high coming into play right there, 82.66. That's those highs right there. Again, a failure at this zone would suggest a snapback to a gap fill and the year-to-date value. Previous quarter's close is right here as well. It's where the gap is. So basically, are you looking for a return back to that point and maybe some overflow to the downside into about 72s before maybe perhaps turning back up? But right now, watching to see how price responds off the previous week's high and that previous quarter's high. A failure back below the previous week's high of 81.80 could begin to open up more of a push into the previous session's range. All right, let's take a look here at gold futures. Right now, gold trading 0.8% higher and is seeing another rotation to the upside. So no major rejection just yet. Instead, this thing kind of remaining within the uptrend, holding position, and even moving back toward recent highs. So pretty strong market right now. The expectation here again is to continue to watch to see how it behaves in the upper prices here, and if we get some significant reaction, that could be an indication that we might be pushing back below 1960 and into the 1830 previous year's close price. So again, right now still very strong, no signs of major rejection just yet, but continuing to watch the space between 2060 2050 rather, and 2100 as a rejection anytime over the next week could open up a big time pullback ahead. All right, let's take a look here at the YM. The YM seeing an upward continuation here. You had this narrow range and a nice push to the upside over the last couple of days. Price has full on recovered on that 33K level. 33K again, the bottom end of that prior trading range. Previous pivot high, big time push to the upside, hold, and a continuation. And again, the expectation here is 34,500. 34,500 is right about here, these highs. And again, it's the top end of this trading range. So to recover the bottom end of the range and make such a forceful move through that range, the expectation would be for a continuation toward that edge, 34,500. We mentioned late last week that any pullback to begin this week could be a buying opportunity for a continuation up. And so far, Monday is about as deep as we got. That was a pullback right to the previous month's close there, previous quarter's close, failed new low, and so far we've stretched away from that zone. So not much of a pullback, but enough to get this thing going to the upside. Again, even if we were to pull back into that zone again, it could still be a buying opportunity for a continuation up as long as price continues to hold that prior close here of 33,500. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.